common mistakes first-time home buyers make and how to avoid them. Stay tuned. Hey everyone, Andrew here with the Lake Team in Houston, Texas. Welcome back to another video that we have for you today. If you're watching this on YouTube and you haven't already, make sure you smash that subscribe button down below. We do our best to produce the absolute best real estate content to produce to you guys each and every single week. And with that being said, let's go ahead and move into today's topic, which is the common mistakes first-time home buyers make and how you can avoid them. So first things first, one of the most common things that we see potential home buyers not paying attention to their credit scores or paying attention to the bills that they need to be paying, but they're not. If you don't know what your credit scores are, you can log on to any credit website, Credit Karma, or any of those other websites you see. My personal opinion would be to go ahead and go with a lender, get your credit scores pulled, and they'll be able to tell you exactly where you're at and if you need to improve anything. But not monitoring your credit is one of the biggest common mistakes that we see. You don't really know if somebody's stealing your identity, or you're gonna have to fight to get things removed off of your credit report that were never yours in the first place. You just don't know. So I would strongly suggest to you guys to figure out a way to monitor your credit. Experian is a good app that we used before. You'll be able to monitor your entire report and see what's going on and make sure there's no fraudulent activity going on. But I would strongly suggest to you guys to monitor your credit before you make the decision of moving forward with purchasing a property. Another common mistake that we see quite a bit is first-time home buyers having too much credit card debt or a extremely high car loan or a car payment. Those two factors right there are the most common that we actually see, car loans being the top. That's if you have an $800 a month car payment, they're going to take whatever you qualify for and they're going to subtract $800 off of that, and it may put you below the qualifying stage of purchasing a house nowadays here in the Houston area. If you can, do your best to pay down that credit card and pay off your car loan as quickly as you can, or refinance your car loan if you need to. But again, I would strongly suggest that you talk to a lender because they'll be able to tell you exactly what you need to do. And if you don't need to pay down anything, don't waste your money on it. Just keep making your payments, and if you can qualify, then more power to you. Another common mistake that we see first-time home buyers, especially the younger crowd, is they're not working to build their credit. They don't have credit cards. They have no established credit history. And so what I would suggest is to go to your bank. If you don't have a bank account, go ahead and open up one now. What I would suggest to you guys is go ahead and get that credit card, charge small items on it, make regular payments on it. If you have a $1,000 limit or $3,000 limit, you don't have to max it out. If you max out, it'll actually hurt your credit. But what you can do is, let's say you have a $3,000 limit, you can rack up maybe $400 or $500, pay it off at the end of the month, and then it shows that you're being responsible with your credit. It's a good look in the credit bureau's eyes, and so it could boost your credit score within a matter of 90 days. So I would definitely, start getting established credit history, get that built, and then you'll start to see your credit scores go up. You'll start to see that you're building this history, and that's one thing that the lenders are looking for whenever they're qualifying people to purchase a house. All right, here's another big one is that we see all the time is consumers just like to spend. Everybody likes to spend money, but when it comes to purchasing a house, a lot of people don't really consider how much goes into it, what you need to have in your bank account. But a big problem that we see, they're not building their savings account basically. So there's just no money in there. And people want to buy a house when they only have maybe $1,000 in their account, and it's just really not a feasible option to do. So what I would suggest is to start saving your money now, however much you can, set it aside, spend very little money, pay your bills, live with what you can, and save as much as you possibly can. That way, in 6 months to a year, you'll have an adequate amount of funds, you'll have a nice little cushion for yourself, and you can use a portion of that money for your down payment to purchase a property if you're serious about it. If you're not serious about it, then you may need to revisit it while you're watching this video in the first place. So another big one is improper budgeting. You maybe are thinking about purchasing too big of a house to start with. I want to go over, just because let's say you have a really good paying job, you get that pre-approval letter, and then you may be able to afford a $400,000, $500,000 house here in the Houston area, which in Houston, that'll get you quite a bit of house. It's a pretty big house, especially out in the suburbs. But what I would suggest to you guys is just because that you get a pre-approval for $500,000 does not mean that you need to spend $500,000. What that means is you need to sit down and really go over what you're comfortable with and what your payments are going to be. That's the biggest thing, is what are your monthly payments going to be. So your lender needs to do a good job at explaining this to you, what your monthly payments are actually going to look like. Are you comfortable with $3,000? Are you only comfortable with $2,000 a month? That's totally up to you and your finances, and you're going to have to discuss it either with, amongst yourselves, with your family, or with yourself, and make sure that you're comfortable with these monthly payments. Again, just because you get approved for $500,000 does not mean you need to spend $500,000. It's not very common, but one of the mistakes that we do see is buyers hooking up with the wrong lender. Maybe the lender's just not doing a good enough job explaining the different loan types to you guys. And we've done a vetting process. We have preferred lenders that we do work with. If you want to see those, you want to fill out an application, you can visit my website, go to the homepage. There's a link on there that says get it pre-approved. We work with local lenders only here in the Houston area. We don't work with online lenders. It tends to be a more, online lenders, to me, in my opinion, just they don't really take care of their clients like local lenders would, in my opinion. That's why the Lake team, we just choose to work with local lenders only. Not getting educated on the different loan types that are out there is a big one. We went over this at the beginning of this video, but you need to understand the different loan types and the cost associated with that loan type. For example, FHA, you're going to have mortgage insurance premiums, which is MIP. You're going to have that for at least a minimum of 10 years, regardless amount of the equity that you have in your house. Versus conventional, once you reach 20% in equity, that mortgage insurance, or PMI, at that point, is going to be removed once you reach 20%, regardless if it takes 6 months or 5 or 10 years. It's going to be removed. So again, I want to reiterate the fact that it's imperative that you guys get educated on the different loan types and the costs associated with them. All right, last but not least, we see this quite often with first-time home buyers, is once they go under contract with the property and they do their inspections, they freak out over the inspection report. I'm here to tell you that most of these reports that do come back aren't as bad as they've seen, or I know they're going to be extremely overwhelming to a first-time home buyer whenever they look at them, and they want every single thing on that report to be repaired, and that's just simply not how it works in our industry. You can most certainly ask for that, but 99.9% of the time, it's never going to happen. And most of the stuff that does come back on these inspection reports really aren't that bad. They're very minuscule items, very tiny stuff that just really you wouldn't even notice if you had lived there. But there are some things that you do need to watch out for. And I made another video regarding inspection reports and knowing when to walk away. But just understand, just because you get an inspection report back that's 50 pages or whatever, it's okay. Don't freak out. We'll go through this report thoroughly, and we'll pick out some of the stuff that's most concerning to you. We'll do our best to explain how major or how small an item actually is. All right, guys, that's going to wrap up today's video. Let me know what you guys think in the comment section below. If you have any other topics that you would like me to cover, make sure to leave that comment as well. If you have any further questions about this video, please visit us at our website, and from there you can reach out to us directly, and we'll be happy to answer any questions that you have. I'll leave all of our information in the description of the video. Don't forget to subscribe. We do our best to produce the best content for you guys each and every single week regarding all things real estate. And until next time, I'll see you guys next week. I'm Andrew Lake with the Lake team in Houston, Texas. See ya.